Today we continued pulling back and we're now approaching very critical support levels, which gives great risk-reward ratios for the bulls. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today's SPY was down 0.87%, and it does look like we're going to continue consolidating in this trading range until we either get a break of support or a break of resistance. So just last night I was talking about the possibility to just ping pong between this range until we get CPI data. And then once we get out of this range, we are going to see price action breaking down through the support trend line or out through this resistance above, and that is going to set the next leg in this market. Now keep in mind the bulls have the advantage of the trend because we are in a bull trend currently, so that does increase the probability we get the bull breakout anytime we go through a consolidation. Typically speaking, when a trend is getting exhausted and there's just too many people buying in and we need to cool down a little bit, you are going to get these periods of consolidation before the trend resumes. Now if the trend is ending, we need to see it in the price action. While you may think the trend is going to end, and while you may be a bear that wants the trend to end, nothing is going to end this trend except the price action breaking down through the support trend line and proving the trend is over with. So if you follow me and you follow my suggestions, I suggest you follow price action. And right now you can see on the volume at the bottom of the screen that we are getting these pullbacks on lower volume. And that is because we have not sliced through any critical support. So the bulls are still holding on to their long positions and there's absolutely no panic selling happening at this time. Now, if we lose the support trend line, then we likely will see the high volume panic selling. And then at that point, I would expect us to come back down to this 200 simple moving average because we did get the golden cross. At some point, it does make sense that we would come back and test that level as support before we continue any higher. So let's just recap very quickly. We are likely in a trading range between SPY 408 up to about 414. The bull breakout is above 414 and the bear breakdown will be below the support trend line, which is going to be this level right around 404. If we gap down tomorrow right down here below this support at 408, we're likely going straight to the support trend line right around 404. And if we break the support trend line, the bulls are getting a lot weaker. Now, on the contrary, if the bulls start pushing early in the morning, this support level at 408 is a great risk-reward ratio for long setups. They're very likely going to push all the way back to the top of the range at 414. And tomorrow is typically what's called VIX Crush Friday. So it is a very good chance the bulls push higher tomorrow. And that is actually my preferred scenario. They have the advantage of the bull trend. They've cooled down from this overextended condition. And now that we've cooled down from the overextended condition, it could be time to continue pushing higher. So no matter whether you're trading long or short, you should be doing well in this trading range as long as you're shorting up here at resistance levels. And if you're going long, do that down here near support levels. As long as you're managing your risk and you understand your own trade plan, nobody can tell you how to trade. So do what you think is right based on the risk you're willing to take and based on following what the chart is telling you. On the NASDAQ 100 triple Qs, we were down 0.88%. And as you could tell, the triple Qs are also coming back down to the support trend line. So this is exactly where we are going to see bulls stepping in because they have great risk-reward ratios. And we have officially cooled down that overextended condition when we were outside the upper Bollinger Band. So right now, if you are a triple Qs bull, you are buying at this level, setting your risk right here at 300. And if we break 300, we are coming back down to the double bottom breakout of the neckline at 294. So you have two very well-defined risk levels at 300 and 294, and the upside resistance level to break is going to be right around 308 all the way up to about 311. If we push through all of that, we should have no trouble getting to 315 and then the 320s. So watch either the bull breakout or the bear breakdown, follow the price action, and as you can tell, we are getting these pullbacks on lower volume, so there's just no panic selling until we lose support. If we don't lose support, we're continuing higher in this bull trend, and it's really just as simple as that. On the Dow Jones, we were down 0.69%, and the Dow Jones continues to try to break out of this flag. But as I continue to tell you, there's a good chance we're going to see the bottom of the flag before we get the bull breakout, which means we could come all the way back down towards 333. If we break out of the flag, we're coming to 327. And if we break out of the bull flag, we're likely going to the 350s with resistance on the way there around 343 and 346. On the Russell 2000 IWM ETF, we were down 1.45%, and we did break down below the support trend line, and we came right down to the rising 20 daily moving average where we found support around 189. So on IWM, you want to set your risk right here at this neckline breakout at 188, because if we lose that level, we could lose the bull trend and we could start into a downtrend that takes us back down towards this gap fill around 181. So stay bullish above 181 and more cautious below, and the next bull breakout is going to be the break above 194, and that should start us back higher towards the 200s. On the ARKK ETF, we were down 2.93%, and ARKK came back down to the support trend line and this critical support breakout level, which is right here at 40.4. We break that support, look for the rising 20 daily moving average of support at 39, and then below that we have support at 38. The bull breakout will be back over $42, and then we can start pushing back towards 44 and 45. On the VIX, we were up 5.5% today, and the VIX did get a daily close back over 20, so we are starting to see a little bit of fear and volatility coming back into this market. Now, one thing I want to caution you about is that typically Fridays are a day that the VIX gets crushed. So as soon as tomorrow, we could see the VIX getting crushed all the way back down below 20, which will make this look like a false breakout. Now, if we get another daily close tomorrow with the VIX above 20, we are very likely going to start losing our support trend lines and our bull trends, and we could start into a correction that could last the next couple of weeks. So watch the VIX very closely, but don't think just one day above 20 is enough to break the support trend lines. We need to see price action proving it. On Bitcoin, we're currently down about 4.7%, and Bitcoin is trying to break down through this support at 22,400, which means there's a very good chance we're coming back down to the breakout level at 21,300. If we lose all of that support, we could come back down to the 200 daily moving average, which is slightly below 20,000. So in Bitcoin, it does look like we could be rolling over and getting ready to correct some of this bullish impulse. But do keep in mind, this was a bullish impulse, which means this is going to be a buy the dip near support levels. And right now, I think the best level to try to buy near is going to be this 200 daily moving average around 20,000. On Amazon stock, we were down 1.8% today, and Amazon did break down below the 20 daily moving average, but we are still closing on top of this critical support at 98. Remember, if we break down below 98, then it does mean we're likely coming down towards 93.5 and then the gap fill at 90. So you will want to set your risk on your long positions right here between 97 and 98. The next bull breakout is going to be back over 102. And the next time we start closing above 102, we should start running towards 115 and then 121. On Microsoft stock, we were down 1.17% today, and this stock is giving really good short positions every morning because it keeps gapping up outside the upper Bollinger Band near this resistance, which is an easy sell signal, and that's exactly why Microsoft continues to close in the red. We did lose the support at 267, but we're still above all of the moving averages in a rising 5 EMA, so it's very difficult to be bearish on Microsoft while it's in such a bullish structure. If we can't get back over 267 or we get rejected from that resistance, look for the gap fill at 258. And you really should be bullish in the longer term as long as it can hold this breakout look above 255 to 252. If we break back over 267, continue to watch that resistance around 275. On Nvidia stock, we were up 0.59% today, and Nvidia nearly closed the gap at 230.62, but did not fully do so because we do have resistance right around 227, and sellers do continue to show up. Now keep in mind, Nvidia is in a very strong bull trend as long as it's above 213, so you can buy the dip off of any of these levels, setting your risk down here around support. The next likely upside target if we close above 227 is going to be that next target higher at 244. If we break down below support at 213, we could come all the way back down towards 192. On Tesla stock, we were up 3% today, and Tesla continues to push higher with yet again another gap up and another gap that has not yet filled. So we do now have a gap to fill to the downside right around 203, but keep in mind we have very strong resistance right here at 207.85, and intraday we were trying to break above that level, but there's just way too many sellers above that level. So I do think there's a good chance we need to come down here and close this gap at 203 before we go any higher. Now, if we do gap up above this critical resistance, I expect to see a continuation of this short squeeze as we start pushing towards 225 to 230. There is no doubt way too many short sellers in this stock, and it is in a very strong bull trend. So it's really not a stock I suggest shorting, even though I do think this is going to be a very strong resistance. If we continue lower after we fill the gap, look for strong support levels around 196 and 183. On Apple stock, we were down 0.69%, and Apple did close down below the 5 EMA, but we are still above this critical support at 150. If we lose the support at 150, we have the 200 daily moving average at 148, and then the full gap fill just below 147. So there is a ton of support in Apple below this bull trend. And the next critical resistance is going to be the break above 156, which should send us higher to the next target at 163. On the financials, we had a pullback of 1.1% today, right back to the breakout level of support at 36.3, and we still do have the bull trend. The industrials were down 0.9% today, coming back down to the 20 daily moving average, and so far still holding on to the bull trend. The healthcare sector was down 0.88%, getting rejected from the negatively sloping moving averages and coming down towards this support at 130. The energy sector was down 0.86%, getting rejected from that resistance, which means we're very likely going to see energy making this next leg lower down here towards 82.6. So jumping back over to the S&P 500, we still have a very strong bull trend and we are getting into some very critical support, which does favor the buyers, which means I expect to see bulls stepping in at support until we see price action breaking through the support, and then we can say this market is rolling over and trying to die. Remember, we're being objective and this trend is still established as long as SPY is above all of this critical support, which means we could just put in another higher low before the next higher high and continue marching higher in this bull trend. Respect the trading range, and that means you can short at resistance. Just manage your risk accordingly in case we get the bull breakout. And you bulls, if we break the support, you have to bail on your long positions because this could still be a bear market. So if we lose the bull trend, we need to look out below. Also, don't forget I have my own trade alert service called Bank Trade Alerts that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you want access to all of my intraday updates and analysis and my members only videos, come join us over at the Stocks Channel Trading Discord community. You'll find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.